If you've received a Texas Sales Tax Audit assessment that feels completely disproportionate to your actual business activity, this video is for you. Here's the reality. You didn't receive that bill because you intentionally evaded taxes. You received it because the auditor likely performed a flawed, surface-level review based on inadequate training. There's a huge gap between what the Texas Tax Code actually says and what an inexperienced auditor understands. And because auditors are not there to coach you, and taxpayers often don't know the specific rules to defend themselves, valid business transactions get marked as taxable errors. Today, we are going to look at why this happens, why the auditor isn't helping you fix it, and how we turned a $314,000 tax assessment into a $40,000 refund for our client by simply knowing the rules better than the auditor. Before we get started, a quick introduction. We're Brown Goertz Co, a state tax advisory firm that represents businesses in Texas sales and use tax audits. We help business owners navigate the complex rules of the Comptroller's office to ensure they only pay what they truly owe, and not a penny more. Let's begin by talking about the root cause of these incorrect assessments. It isn't usually malice. It is a lack of deep expertise on the state's side, combined with a lack of defense strategy on the taxpayer's side. There is a common misconception that an audit is a black-and-white calculation. Business owners often think, "We're doing everything right. I'm sure everything will be okay." But in our experience, the initial assessment is almost never correct. The problem is that auditors are often not trained well enough to handle complex business structures. They operate on checklists. They look at transactions on a surface level. And most importantly, they do not ask the probing questions required to understand why a transaction might be exempt. In this video, we're going to break down the reality of auditor limitations, explain why the burden of educating the auditor falls entirely on you, and I'm going to walk you through a specific case study where correcting the auditor's work saved a client over $350,000. Let's start with the core issue. Why do audit assessments often come back so high? It comes down to a significant training gap. The Texas Comptroller's office deals with high turnover. This means the auditor sent to review your books might be relatively new, inexperienced, or managing a caseload that is simply too heavy to allow for a deep dive. Auditors are trained on the basics. They are trained to identify taxable items. They look for missing certificates, sales invoices that aren't taxed, or purchases on which you didn't pay tax. However, they are often not trained on the deep nuances of the Texas Tax Code, especially as it applies to specific, complex industries like construction, manufacturing, or oil and gas. We frequently encounter auditors who simply do not understand the rules they are there to enforce. Unless you know more than the auditor, or have someone on your side who does, their lack of training becomes your financial liability. That brings us to the second critical point. If the auditor doesn't know the rules well enough to ask the right questions, they certainly aren't going to coach you on how to reduce your bill. Many business owners treat the audit like a collaborative process. They assume that if they open their books and are transparent, the auditor will act as a consultant, guiding them to the right outcome. Here's the reality. The auditor is not your consultant. They are an enforcer of the tax code as they understand it. And if they are an enforcer who doesn't fully grasp the rulebook, you are in a difficult position. Taxpayers often don't know what documents are legally sufficient to prove an exemption. You might hand over a stack of invoices, thinking that proves your case. But the auditor might need a specific exemption certificate, a specific contract clause, or a specific type of proof of delivery. If you don't provide exactly what the code requires, the auditor won't say, "Hey, I see what you're trying to do here. If you can just get me a copy of the estimate for this customer, I might be able to remove this tax." They won't say that. They will simply deny the deduction and add the tax to your bill. We see this constantly with resale certificates. If you provide a certificate that has a minor error, maybe a missing signature or address, the auditor will simply disallow it. They rarely stop to coach you. They don't tell you that Texas law allows you time to go back and fix that certificate. So you have a situation where the person grading the test looks at things on a surface level, and the person taking the test doesn't know the format of the answers required. This lack of coaching leads to assessments that are fundamentally incorrect. To give you an example of how this plays out in the real world, I want to share a recent case we handled. A Houston-based contractor called us in a panic. The Comptroller had completed their audit and issued an assessment of roughly $314,000. They were angry and frustrated. They believed that they had followed the rules, and now this auditor was telling them that everything they understood about the law was wrong. What we found was a classic case of an auditor who didn't attempt to identify the taxability of the jobs this contractor performed. The auditor saw sales tax not collected on many of the jobs and applied the tax rate across the board. They didn't ask to review the contractor's job files. They didn't ask the contractor about who the customers were or what types of jobs the taxpayer performed. We went through their job files. We provided contracts and estimates. We provided material purchase invoices. We gathered the correct exemption and resale certificates that were missing, documents the auditor never told the client they could provide. We reconstructed the narrative of what actually happened during those transactions to prove they were exempt under specific sections of the tax code. But we didn't stop there. Because we understand the rules better than the average auditor, we looked for tax that this taxpayer paid to their vendors in error. It turned out that while the auditor was busy incorrectly assessing tax on sales, they completely missed that the taxpayer had paid tax on purchases where they shouldn't have. When we presented the full defensible documentation package to the state, the entire dynamic changed. The result? The $314,000 assessment was wiped out completely. And because we identified the overpayments in tax to vendors, the state actually ended up writing them a $40,000 refund check. That is a swing of over $350,000. Now, imagine if that business owner had just accepted the initial assessment. They would have paid over $300,000 they didn't owe, all because the auditor didn't understand the rules or didn't take the time to do an actual audit of this taxpayer, and the taxpayer didn't know how to defend themselves. If you have received a notification of audit results, what should you do? First, do not panic and do not pay the bill yet. An assessment is not a final judgment. It is a preliminary finding based on the information the auditor understood at the time, which, as we've discussed, might be very little. Second, understand that the burden of proof is on you. You cannot rely on the auditor to find the truth for you. You have to prove it with documentation. The bottom line is this. An audit is a verification of facts. But if the person verifying the facts isn't trained to see the full picture, or doesn't even try to see the full picture, and if you don't provide the right documentation to prove your case, you are going to pay tax that you do not owe. If you are faced with an assessment that you do not understand, you do not agree with, and you don't know what to do next, don't assume the number is final. We're always happy to take a look and let you know if we can help. Our contact information is in the description box below. If this information has been helpful, please consider hitting the like button, subscribing to the channel, and turning on the notification bell so you don't miss future videos. We regularly share practical guidance on Texas sales and use tax audits and issues that can have a real financial impact on your business. And if you know someone who might benefit from this information, please consider sharing it with them. Thanks for watching.